Hey everybody, good evening. Futures Brizio here. It's Friday, December 6th, 2024. It's almost 9 p.m. New York time, and hope everybody had a great week. I did make a video earlier, kind of wrapping the market for the week. So for you futures traders, so if you didn't check that out, go back check that out. And as always, make sure you smash the like button, subscribe to the channel, ring that bell notification so you get notified when I make new videos. And like I said, make sure you like the videos. Take 2 seconds to do that now for me. I appreciate it. And any questions or comments, drop them down below. All right, so let's just jump right in. Now, I made a video on my channel literally about 2 years ago on this topic, and I'm going to revisit it. It actually was the most viewed video I ever made, which is kind of kind of wild actually that it got that much attention. But I'm going to revisit it, even though I don't trade Forex primarily now. This does apply mainly to Forex just because of the way this website is set up. But they do have a couple of futures markets that they do in here. So there is a little bit of leeway there for people that don't trade Forex. But again, this is mostly for you Forex traders. And like I said, I am not doing a lot of Forex, but I do still do some. I just don't spend a lot of mental capital on it because I save that for my futures trading. So let's get right into it. So this is this website. It's called forex.clientsentiment.com. And basically the whole premise behind this is, if you don't already know, is that of course everybody probably knows that 60 to the stats are 70 to 90% of all traders lose money, and it doesn't matter whether you're trading Forex or anything else, okay? The vast majority lose money, okay? And so because of that, then the idea is, well, if 70, 80, 90% of the traders are losing money, then on a really simplified basis, that just means you just trade in the opposite direction of how the crowd is trading, and you probably will greatly improve your chances of being successful just doing that. Now, of course, it's not that simple, but that's basically the theory behind sentiment, okay? And there's lots of brokers that show client sentiment on their websites, and there are other websites that show sentiment. But the nice thing about this website, first of all, it's free. Second of all, it's very easy to look at the data and interpret it. You don't even have to sign up, as you can see here. And I'm not pimping for this site or anything. There's nothing that really to advertise. It's just a free open site. And I think it's the best one if you want to use this in your trading. And again, you can't just necessarily trade this alone, but you can definitely incorporate it into your whatever your strategy is overall, and basically trade against the crowd to give yourself an even better chance. Again, with the realization that 70 to 90% of traders lose money, retail traders lose money. Okay, so that's the theory behind this. So it's Forex sentiment, client sentiment, forexclientsentiment.com. This is what you see, and that's it. And I see there's no sign up or anything. So you just click to get into the site. Now, they do offer a course now, which I haven't been on this website in a long time. And so this wasn't here before, but they do offer this course here that's like $50. I will tell you, first I watched this little preview video, which is like 3 minutes long, basically explaining again what Forex sentiment is. So I would definitely watch this even if you don't buy the course, and I'm not recommending you buy the course. I'll get to that in a second, but watch this video because this is like 3 minute video, and it just basically explains again what Forex sentiment is and what sentiment trading is and trading against the consensus is. So it gives a really nice quick summary of what this site is all about. So the site, I tell you guys, I didn't end up buying the course. It's $50. I'm like, I just want to see, maybe I'll learn something. And in the end, it basically just goes through how they trade with it. Again, they go through how to This is basically the course. I'm not going to play it because obviously, it's copyrighted, I'm sure. But so they have introduction, what's Forex entering, what is the contrarian indicator, which are the little arrows I'll show you. Then they get into trading strategies, managing trades, considerations, and conclusions. So the whole course is about 2 hours long. If you watch it beginning to end, it'll take you, a couple of hours at most to watch the whole thing. The key obviously is in this section here, section 4 and 5, 6, basically here, but this is the trading strategy under number 4. These first 3 modules just kind of, again, get a lot more detail into what Forex sentiment is and what their contrarian indicator is, but then it gets into the heart of it. And basically they use 2 things to get into a trade, which I find to be a little bit, probably more than what I would probably do. So what they do is they look for, essentially, this is their contrarian indicator, these little arrows. So they basically are looking for, in this case, if let's say they want to go short, and this would be a good one to go short on. So they're going to look for, a red contrarian arrow, because again, you can see the blue here shows that most retail traders are bullish. Obviously, the bigger this blue area, the more bullish they are. In this case, as of right in here, you can see it up here, they were about 67% bullish, which, anything over, in my opinion, anything over about 60% one way or the other starts to represent an extreme. So in this case, they were like 67% long here. So they basically say, okay, well, 2 things have to happen. You have to have a contrarian indicator, and then they say go to the weekly chart and add on a couple of simple moving averages just to determine the trend. So they're looking to confirm the trend, in this case a downtrend on the weekly chart at the point you see one of these red contrarian arrows, and then you just go and short it that way. Well, to be honest with you guys, there's nothing wrong with that. I didn't find that to be all that great. So I'm going to show you how I use it, but just know that that's basically how they use it. They have 2 rules, which it is very simple: a contrarian indicator painting on the chart, on their charts here, and the weekly trend lining up with it. Okay, so you have to go open a weekly chart, in this case of Aussie US dollar, and confirm that the trend is down at this point, and then you're good to take shorts. Now on their charts here, all of their charts here are daily charts, so all these bars are daily bars. Okay, so there's about 3 months of price data on each one of these charts that you're seeing, and you can roll your mouse over it and you can see all the stats up here change, which is really nice. The key things to look for are these percentages right here. These are the prices. I don't really care about that, but it shows the date, the instrument, open, high, low, close for any particular bar, and what these percentages are. And the percentages are also showing here on the right hand axis. So right now, this Aussie US dollar is about 85% of retail traders are long. So obviously that's, you want to look for short positions, and you can see that that is exactly how it's played out. As the bullish sentiment goes up, the price goes down. They crisscross over right here, and you can see this is how this works. And you can see why so many traders lose money just based on this alone. Okay, that's very clear that, as in this case, the sentiment goes up, price is going down, and retail traders are just constantly on the wrong side of the market. Okay, so there's a couple of ways that I feel you can use this. One is just to say, well, when price moves from a blue area to a red area, like right here, that you want to go long. When it crosses from a red area into a blue area, you start to go short. Well, you could do that, but I don't think I would recommend that, because it could just be a big pullback. In other words, like price came down here into the red zone, this could just pull back and then start going back up and cross back into the red zone again. Okay, so I don't necessarily like to. I don't recommend doing it that way. Okay, so you could do it the way they do it, which again is they use these contrarian indicators when one paints, and as long as the weekly chart trend is aligned then they say go ahead and take the short. Now again, these are daily bars. So the nice thing about this, no matter how you do it, is you only have to look at this basically once a day at the close, when the daily bar closes, which for me is 5 p.m. New York time. So that's it. You only have to look at these literally once a day when the bar closes. So, okay, so I'm going to get into how I like to do this. And then we'll talk really briefly about continuation trades using this too. So let's say you're just coming to this site for the first time and you want to look for potential opportunities. Now, I've already gone through these before I started the video. So I have a list, and I just simply wrote it down. I have a list of 2 currency pairs right now that are just kind of potentially starting a new trend direction based on this sentiment indicator. And I have 5 pairs that are on what I would call a watch list. That they're not at the point where I would trade them based on this yet, but I'm watching them. Okay. The interesting thing is that between those 2 lists, 5 of those are yen pairs. Of the 5 out of the 7 are yen pairs. So clearly the yen is driving a lot of this, and I'll talk a little bit more about that afterwards. But that's basically what I'm looking at here. So how I do this is if I'm just coming to this for the first time and I'm not looking to take a continuation trade, I want to find a fresh opportunity where maybe the sentiment is just starting to change to, in one direction where I want to start looking for trades. And for me, that's a minimum of 60% in one direction versus the other one. So for instance, one that's basically ready right now that's already started is Aussie yen. You can see Aussie yen. Now they show it as mixed, but I'm looking at 60% as the minimum. 65 would be better. Okay, so this one's at 62, so it's right on the border. So if we click on this and we go to Aussie yen, it'll bring up the chart, and you can see what's happening here. Aussie yen at this point, basically as of November 28th, this is the November 28th candle, closed out of the red and into the blue, and at the same time the bullish sentiment is increasing. Now as of today, it was at 62%, like I said, as of today. Now at the time when this happened, the sentiment was only at 54%, so I would not have taken the short right here. As I said before, you could do it that way, where as soon as it crosses from one color into the next, then you start taking trades in that direction. Okay, but again, there's risk in that because this could just be a pullback where it could cross down one candle and then all of a sudden turn and start going back up again. Okay, so but at the time when this thing crossed over, the sentiment was only, as you can see up in the middle there, it's only at 54%. And like I said, 60% is the minimum, 65 is better. Okay, so at this point now, where we are now, we're at 62. This I would feel comfortable. So I'm saying Aussie yen is at the point now where I would start looking for short. So then I'm not going to get into entries because you can decide how you want to enter trades based on whatever methodology you use. That is not the scope of this video. But for me, I'm not trading on a daily chart. These are daily bars, but I'm not trading off a daily chart. At this point, once I identify an opportunity, then I'm going to go to the actual chart, and I'm going to go down to a 4-hour, 1 hour, 15-minute chart, whatever. Wait for a pullback, correction, pullback, retracement, whatever term you want to use, and then look for a short position at that point. And again, I'm not going to get into that because that's beyond the scope of this video. I'm just showing you how to use this sentiment data. Okay, and so Aussie yen is one that I would consider kind of active right now because it's over that 60% level now. It's clearly trending down. We have this crisscross that already happened last week. So we've had this price action for the last week or so, and now the sentiment is getting to the point, where it's increasingly bullish, and so with price going down, so this means you have bullish sentiment and you have price starting to point down, so that means you're looking for short positions. Okay. The other one that I find right now that is setting up currently is pound Canadian, GBP Canadian. So let's go look at that one. And you can see right here, okay, so here's where our crossover happened. So you can see now we're becoming increasingly bearish. See how big this red area is, and it's getting bigger. See how the red area is beginning to sink lower. So right here, we had this bullish bar crossed over. Now, when this crossed, it was at 60%. So technically on this one, you could have started entering right in here because this was at 60% at the close. That's right on the border because, like I said, 60% is my minimum. So you can see right where I have my cursor. If you look up at the top, it says short 60%. So at the close of this candle, anywhere from here on in, I would start looking for longs. And you can see that has carried through. And, you know, we are now down to, as of today, we're at 68% short. So the shorts are increasing, the retail shorts are increasing, yet price is going up, okay? So this is one that's already been going on. So this one's a little bit more aged than the Aussie yen is. So now this is one where I would go to the pound Canadian chart, I'd wait for pullbacks and then look for longs, okay? For as long as this is trending down. Now, as soon as this thing starts to turn and go back up and we cross back, in this case, back above 40%, where, you know, it becomes 60-40 and starts increasing again, then I would, at that point, I probably would look to probably get out of that trade at that point. So that's the pound Canadian, which is a little bit more advanced. So now let's go look at one that is on my watch list, but it's not ready yet. We're going to look at the Australian dollar, New Zealand dollar, okay, the Aussie Kiwi. Gotta find it here. Okay, right here. So you can see right now it's showing 54.46. Okay, so it's mixed, right? It, like I said, 60% is the minimum. So let's click on this and look at the chart. And you can see what we've got here. We just now, the last 2 days, have crossed down where price is going lower, but sentiment is increasing. You see this blue area is beginning to creep up, but yet the price is going down. Now, right now, as of today, we're only at 54%. So that's not enough for me. I want to see this blue area grow and get to at least 60%, 65%, and then I will start looking for short positions, okay? Now, because it might not happen, right? This could just keep moving sideways, and I don't want to get caught in a sideways market because you can see it had been moving sideways quite a bit, okay? So the Aussie Kiwi is definitely one that I'm very actively watching. If this sentiment here, this bluish bullish sentiment continues to rise and gets to 60 or better, and again, you only have to check it once a day at the daily close, then at that point, if it gets to that point, I will start looking for short positions on the actual chart. Again, going to a shorter time frame, looking for a pullback, and then entering short. Okay, again, I'm not going to get into entry techniques. You know, you have to figure that out based on how you like to enter on trades. I don't want to, you know, to be honest, I'd rather not, you know, enter on a strong bearish candle. I mean, a little doji like this, if you go down to a short time frame, is going to obviously show a lot of indecision. But if this thing painted like a big, strong bearish candle and it closed at the low, I don't want to enter at that because I'm entering at, you know, at a low price, and chances are it's going to pull back and I'll end up, you know, with big drawdown while I wait for the retracement to be over. So I'm going to go to a shorter time frame on the actual chart, wait for a pullback on the shorter time frame, and then look for an opportunity to get in short. Okay, so that's the Aussie Kiwi. That's one. And we'll just look at one other one. Happens to be another yen pair. We'll look at, just pick one, Euro yen. Again, right now, 50-50, split right in the middle. So if we look at Aussie yen, so here we are. Okay, and again, we have price broke through here last week. We have increasing bearish sentiment. Bullish retail sentiment. So as this thing rises up, it's only at 50 right now as of today. So when it crossed over, it was only at 43.57. So I'm not interested in anything in here. I want to wait for this to get up here, and then I will look to enter short. Okay, so if it gets up here, it hits at least 60, 65%. Then again, I will go to the Euro Yen chart and look for short positions on a shorter time frame. Okay, So for me right now, it's the Aussie yen and the pound Canadian are tradable right now. And then I have Euro yen, pound yen, Aussie Kiwi, which we looked at, Kiwi yen, CAD yen as on my watch list. Now you heard yen in there a lot of times. Clearly, that means the yen is driving all of those pairs. The yen is getting stronger. Should you trade all of those if they all get into this zone? No, I wouldn't, because it's too much exposure to the yen. Sorry guys, I had to step out for a minute. Like I was saying, of the seven pairs I have either on my active or my watch list, five of them are yen pairs. So clearly it's the yen strengthening that is driving these. Just as an aside, again, many of you probably know this. You don't want to go, and even if all of these end up, the sentiment changes to where they all hit like 60% or higher, you don't want to go and trade all of those. It's too much exposure. You want to pick one or two of these yen pairs that work, that, go and look at the chart, trade the ones that have the most opportunity, the ones that are the furthest away from a major structure area on the chart. In this case, a major low on the chart. You don't want to be, selling into a major area of support or demand. Okay. So, you just don't want to expose yourself. So you don't want to go and take trades on all five of those yen pairs, right? Pick one, maybe two. Maybe pick one geographically suited for you. So if you're in Asia, maybe look at, Aussie yen, Kiwi yen. If you're in Europe, look at maybe Euro yen, pound yen. If you're in the US, CAD yen. You might also be able to look at Euro yen, pound yen if you're in North America too. So you get the point. Like, just don't go and trade all these blindly. Okay. The yen is a safe haven currency, and it's very sensitive to risk on, risk off sentiment. So you don't want to go and put yourself at a bunch of risk because you're being greedy and you go take trades on every one of them, right? Pick one or two, look at the chart, look at where it's trading right now, and find the one that's, find the one or two that are the most suitable and have the most potential, downside potential in this case. Okay, so that's just kind of an aside. All right, so that's that one. I guess we can maybe just look at one more. I don't want to drag this out too long, so let's look at let's look at CAD yen. All right, so you see CAD yen right now is at 52.48. So we click on that, brings up the daily chart here, and you can see again about 4 days ago we crossed into from the red down into the blue. So we have prices sinking, we have bullish sentiment rising. All right, as of today it was at 42%. Okay, as of today, actually this is as of yesterday. I guess hasn't printed today's price action yet. So that was as of the most recent one. So this gets up to, again, 60% or better, then at that point I would be comfortable starting to look for short positions. Okay. Now again, as I mentioned, another way you could do this is every time price crosses from, in this case, blue to red, you start looking for longs. Okay, and then now prices have now crossed out of red into blue. You start looking for shorts. You could do that. Okay, just understand that this can be, this can be false, because if price was going, down here, it could have pulled into this area and then rolled over and kept going down, and you would have been, caught on the wrong side. So that's the whole thing about using the sentiment areas, as these percentages of bullish or bearish sentiment, and just looking at the size of these structure areas to know when it might be a good time to go long. Okay, back here actually there was an opportunity to go long right in here. You can see price crossed. Now back here the sentiment was only at 49%. Was only at 49%, but eventually it changed, and so you could have taken long positions here. But actually that's not really good either, because the price was going up and the sentiment was rising with it. So actually, just forget I said that. Don't want to confuse it. Just stick to what I said, guys. This is it. This is the whole crux of this strategy. Price is now trending down. Wait for this bullish sentiment to rise, if it does, to get to 60, 65% bullish, and then start to look for your short positions. Okay. So again, I look through this, and it's like I said, there's about 7 pairs right now that are either active or on a watch list. If you want to look at there's nothing coming up, but if you want to talk about, I'm going to bring up the S&P 500. They do have some futures on here. So here's the S&P 500. Okay. You'll notice on these, so you see here, okay, so price comes up here, crosses into the red. You can see, look how big this bearish retail sentiment is. It's at 65% bearish. Okay, this is golden. I mean, look at this. This thing is just rocketed up, and this one would have been good right from here. Right, as soon as this crossed, we had 67% short bearish sentiment. So naturally, this is a perfect area for a long, and this would have still been perfect all along here. Okay, so that's an example. Now they have these little contrarian arrows here, and basically, I think what they're trying to say is whenever one of these arrows paints, is that it's potentially looking for an area to go long. But I don't like these, because if you look at where some of these arrows are, like if you took a long right here, remember, these are daily bars, guys. The next 2 days, price took a big drop. Okay, so I rather honestly uncheck this and not even look at those, and I'm just going to go and look at my shorter time frames. Once I have my direction and it's been confirmed by these percentages, then I'm going to go to shorter time frames and start looking for areas to enter. All right, so I'll use the sentiment to kind of tell me which assets, which markets to look at, but then I'm going to my real charts and down to shorter time frames and wait for pullbacks to enter. So if you wanted to take a continuation trade, as long as this percentage, in this case bearish sentiment, maintains, then you just keep taking pullback trades on a shorter time frame. Okay, that's all. That's really honestly all you have to do. Now, at some point, I would assume the sentiment will start to change, and we'll start to see this bullish sentiment start to creep back up. And once it gets back above, in this case, it'll start to go up. Once it gets back above 40%, gets to about over 40, 45, and certainly anything higher, at that point, I probably would stop trading this long. I mean, I don't know when that's going to happen. These markets have been going up for so long. But, at some point you figure there will be a change of direction. Okay. So as the sentiment begins to grow, if it does, when it does, and it gets over 40%, that's where I'd say, okay, the sentiment is now becoming more neutral. I'm going to stop trading it in this case and to the upside, and I will wait and see, what happens. I'll stand aside and I'll just exit that market and go look for something else to trade until if and when it gets to another extreme level later on. Okay. So that's how I would manage, when you should decide to step aside. Let's just take a super quick look at one that's really, so let's look at dollar Swiss. You can see it's at 81 bullish, 19 bearish. So what do you think we're looking for? We're looking for bearish positions, and they have these little arrows here. So if there's 3 arrows, that means it's really strong in one direction. Then they have mixed. Then they have some with like 2 arrows, and they have some with like 1 arrow, like Euro Swiss. Again, you can use these as a general rule of thumb. I don't really pay much attention to this. But let's look at dollar Swiss. And you can see, I mean, look at the sentiment on dollar Swiss, right? So we had 11% when price anywhere in here. I mean, when this trend started, okay, we were at back here, okay, we were at 91% long, and then the price started going up. So now we're at 81% long. We're at this super high level of long, and price is now starting to roll over. So I wouldn't necessarily short this right now, because I'd want to see this thing really start to drop off because the dollar Swiss has been very, very strong. Okay, so this is an example of where, in this case, this particular strategy wouldn't work because price is going up and we have this huge bullish sentiment in here, and price was going in that direction. But you can see maybe that's starting to change now. We have price rolling over, starting to go down. Okay, and so let's see what happens with this. Does the sentiment stay high? Okay, in which case, as long as the sentiment stays over like 65%, then this could be a pullback trade where price kind of comes down and keeps going up. Okay, so that's the dollar Swiss. All right, so again, just to look at this website here, they've got lots of different currency pairs. It's not everyone, but there's quite a few, as you can see here. It's got to be at least 20 or 30 here. They have this little key right here, top trading opportunities. Obviously, like I said, the ones with 3 arrows, 2 or 3 arrows, are the strongest trending ones. So those are the ones you kind of look for your continuation trades, right? Maybe the ones with 1 arrow, maybe it's starting to wane. Either the trend is very new or it's very old. You have to kind of go look at it. If it's very new, then great. Then Aussie CAD, if it continues to weaken, that might be a good opportunity to start trading it. But if it's towards the end of the trend, maybe the sentiment's starting to shift, then maybe that's one you want to stay away from. But again, for me, I'm going to look for ones that are between 50-50, 55-45, 60-40, somewhere in there. Those are the ones I'm gonna go and look at, and I'm gonna put on a watch list or an active list like I have now, and those are the ones that I will start to look for opportunities on. Okay, so like I said, they do have some indices here. This is the French stock market, Nasdaq, UK 100, German DAX 30, S&P 500, US 30. They have gold and silver and oil. Although it's interesting, they have gold and silver on here, but you can see these weird colors. And if you click on the chart, they tell you right on here, we don't recommend using sentiment data when trading silver. So they show it, but yet they tell you not to use it. So it's a little weird. I mean, why bother showing it if you're not recommending people use it? So the only one here really is oil. And if you look at oil right now, again, we have very bullish sentiment. When price started going down, we still had very, very high bullish sentiment, and price has gone down, and sentiment continues to be very high here. We're at, even as of now, you can see it really hasn't changed much. As of the last update, it was still 84% long, and so this is one where you could just look for continuations to the downside. Because the sentiment remains very bullish, yet the price continues to trend down. Okay, so that's oil. All right. So that's sentiment trading. Okay, basically contrarian trading, trading against the consensus, against the retail consensus, whatever words you want to use. That's what you do, and you can trade it in several different manners. That's the way I like to do it. Again, I'm going to come to this, and I'm going to make my list of ones that are neutral basically right now, under 60%, 50-50, 55-45, under 60, basically anything under 60-40. Okay. Those are the ones I'm going to make note of, and I'm just going to sit and wait. And once a day, I'll go and check the chart, and I will figure out if there's, if there's been any change, and if at some point the sentiment reaches an extreme of at least 60%, then I will begin to look for trades in the opposite direction from that sentiment. So if it reaches 60% or more bullish sentiment, I'll start to look for sells. If it reaches 60% or more bearish sentiment, I'll start to look for longs. Okay. Again, you're just trading against the crowd. So, all right. So I'm going to leave it there, guys. A little bit different. But again, this is really, especially for you Forex traders that are just looking for, kind of a mechanical thing to look at, but still allows you to use technicals. You can use this with your fundamentals, to really understand where fundamentals kind of fit in, that a news event could be an opportunity to get back into a trade, as long as you're, if you're trading in the direction contrary to the crowd. You're in most cases you're going to be on the right side of the market. It's just a matter of timing the market and not just jumping in, randomly where you get caught in a big drawdown on a pullback, but wait for those pullbacks on the shorter time frames and then get in. Okay, so that's how I would handle this. So, all right. So, and like I said, me personally, I wouldn't enter on the daily chart, but these graphs use the daily chart, and then you use your shorter time frames to find your entries and exits on pullbacks. So, all right, guys, I'm going to leave it there. A long video. We're at 35 minutes here. It's more than enough. I hope you guys have a great weekend. If you like the video, again, smash the like button and subscribe to the channel. Drop a comment down below if you found any value in it. Appreciate it. Or if you have any questions, I know a couple of points in the video got a little jumbled, but hopefully you get the strategy. But check out the website, backtest it, see what you think. You can easily confirm everything I'm telling you just by going here. Again, it's a free open website. You don't even have to sign up. It's open to everybody. So it's good stuff. All right, guys, I'll let you go. Have a great weekend, and we'll talk to everybody soon.